Something we find very interesting these days is what's recently been happening with Bitcoin. And we want to look at it from the standpoint of what is Bitcoin worth compared to some valuation models. And the most common thing we want to look at is the stock to flow model. Now, over the last year, Bitcoin is up more than most anything else, as well as other cryptocurrencies. Of course, technology was the best performing sector last year, and all other sectors, a lot of them were down, whereas technology was up, driven by, of course, the Magnificent Seven. But cryptocurrencies did even better. Now, what is driving that? What we're seeing that's coming up is what's called the halving. And that is where the flow of new Bitcoin, or the ability to mine Bitcoin, gets cut in half. And that's going to be happening in the next couple of months. What we saw this past month was an increase in demand driven by the ETFs that just came out, especially through BlackRock, and the amount of money that flowed into Bitcoin. Now, a lot of times people will buy the rumor and sell the news, and that's exactly what happened last month. But let's take a look at what may also be driving things, not just demand through the new ETF, but a reduction in the supply that may drive the price a little bit higher. What we can see here is something that's known as a stock to flow model. Now, when we look at the stock, that's the total amount of existing supply, and the flow is the amount that can be produced. And so the flow is the amount that can be mined. And here we're looking at gold, we're looking at silver, and we're looking at Bitcoin. And right now, when we look at the supply of Bitcoin, it's about 19 million coins. They're able to produce a little over 300,000 coins. And guess what's happening? In just a couple of months, the amount they're going to be able to produce is going to go down to about 160,000 coins a year. Now with gold, there's 187,000 tons out there, and they're able to mine about 3,000 tons. And so we can see that the stock to flow ratio is about 62. Bitcoin stock to flow ratio is the closest to gold right now. And so they're able to grow the supply by about 1.6, 1.7% a year. Guess what happens in a couple of months is that they're only going to be able to grow the supply of Bitcoin by about 0.8% a year. And so because of that, because of the model, the amount that the price may go up is determined by that. So as the demand increases, that drives the price. And as the supply decreases, that also drives the price. And so we can look and see how that may affect things. So what we see here is the gold annual growth rate's only at about 1.5% over a long period of time. But the U.S. monetary base has been growing faster and faster over time. So we can see that it was growing about 7% from 1917 through 2013. From the 70s through 2013, it grew at close to 10%. And guess what? Over the last 10 years, it's grown to closer to 12%. And so as the monetary base grows faster, the value of gold and other commodities and precious things grows faster as well. And that's one of the main reasons that people are looking to other stores of value like gold or Bitcoin versus the dollar. So what we see here is how the value of the Bitcoin can increase as the amount of flow, or the amount of new things that can be mined, or new Bitcoin that can be mined, goes down. So we can see it with the red line there that the value has been going up over time. From 2013, the fair value was showing at about 177. That grew to 407, and then just shy of 4,000, and then 5,000, and of course now it's close to 50,000 in 2024. That's what the stock to flow model shows the value of Bitcoin. And we're right at the value based upon the stock to flow model. So we're right at the valuation. But you can also see in the past that the valuation, when the demand goes down, in the past it's gone down to as much as 25% of the value. Most recently got down to about 32% of the value. But when the demand gets the highest, we've seen it go through the roof. We've seen it go up as much as 600 some odd percent of the value. And so We don't expect that to happen anytime too soon. It could be it goes up to 100%, 50% of the value or something like that. If it goes up to around 140, 150% of the value, then the value expected based upon the stock to flow model should be around $450,000 a coin in 2025, late 2025. If it's 150% of that, we're looking more like 600 some odd thousand per coin, which is quite a bit from here. So this is one thing we like to look at, are valuation metrics based upon other factors that we also see out there in the market, where we use stock to flow to value things like gold and silver and other precious metals and other commodities out there. Some people like to use this for things like Bitcoin. So if you like this video, please feel free to like it and subscribe and share with your friends. And as always, stay thirsty for knowledge, my friends.